Hello crew, this playbook strategy is called the SFP block, and as the name suggests, it's kind of a cross between a swing failure pattern and an order block. It is an order block that is created from an SFP that can give you a really nice low risk trade to take if you have had a missed opportunity off of a previous SFP. Okay, so I really like to trade this. For example, if we've seen an SFP off of a major high within a range or a deviation above the highs or the lows of a range, and that's happened, say, while I've been sleeping during the Asia session. If I want to get back in on that trade and I want to find a really good entry back into it, then this is a really nice one to be taking. But there are certain conditions that have to be met in order to be able to take this trade. So let's have a look at it. So the SFP block is named as such as it occurs after a swing failure pattern and gives the trader a golden opportunity to get back in on a missed SFP trade. Its win rate is roughly 50%, however the risk associated with it is extremely low, and we get on average an 8-to-1 risk to reward off of this. So really nice return from the trade itself, even if the win rate itself isn't that high. To reduce the chance of loss, certain conditions must be met. Firstly, I only take this setup if I have missed an SFP of a key level. Secondly, I look to enter only if a local market structure change has occurred. And thirdly, I target entry only in the wick space of the original SFP. It can be traded on all time frames, however a 4-hour swing failure pattern with a 30-minute market structure is a good place to start. So you are looking for an entry within the wick of the SFP candle. Target the EQ of this block, so target around the middle point of the block that's formed. Your invalidation would be closing above the top or below the low of the wick, and your target will be the local highs or the local lows which created that change of market structure in the first place. So you can see here from the diagram, this is what I mean. So you have an SFP over here of a key level, and we'll look at this in more detail in just a second. This creates a market structure break, or a break of structure down here, no, a market structure break. And then you come back into the order block itself, which is formed just using the wick at the top here. So you can create a block, create a channel across here, and you're targeting an entry within there. So you will be getting that entry on these candles here, having had these initial conditions met, and your target is to take out the lows that caused that initial change in market structure. Your invalidation would be if this starts to close above this wick here on the left hand side. So we'll have a look at this in more detail now, and this is it on the chart. So this is on the Bitcoin chart. This is from towards the end of September, where we had a really kind of nice range that was playing out, and you could see that we were forming this uptrend that came and took some major highs at the top of the range here. So from this you can see the SFP that has occurred, and if we go down onto the 30-minute time frame, which gives you a clearer picture of the market structure itself, with this just being more or less a straight line up, but here you can see the actual pivots that were put in. So a low, a high, 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 and then it gets broken. Okay, so this is the first time you have had a major change of market structure that has broken structure at this point, and that gives you then the conditions for this to be met. So let's say, for example, you wanted to grab the SFP, but you missed it. Price comes all the way down here. The trade's got away from you. But now you have new conditions that have been met, and this gives you a perfect opportunity, whether trading it on the 4-hour or the 30-minute, that you can then draw the block at the top and get yourself a new entry off of this. So that is the zone in which you would look to enter. So you can either draw this as a rectangle, looking at the kind of the block that we're looking at here, or you can use the parallel channel tool, which I quite like, and draw it horizontally, and then you can get that midpoint as well, which is where you'd be targeting your entries. So the way that I tend to do this is just stagger the entries. You go one at the bottom of the block and another within the midpoint, and then if you are really risky, go up towards the highs, although you actually don't want to be taking out this high at any stage, because that's when the invalidation becomes very close. So you're ideally looking to get in within this zone here of that particular block that is formed. And then for the target off of this, it's very straightforward. So all you are looking for as the target is that is the low which changed market structure. So you're looking to take that out, which gives you a trade that looks like this. Okay, so you're targeting within the wick space. I've lost the channel that I drew. With your invalidation at the top and your target down at the bottom there. Let's just draw that parallel channel on again so you can see that in more detail. So that gives you the entry, your target at the lows, your invalidation if you close above that particular wick. Look at that on the 30-minute time frame. And you can see here, if you like, you can even adjust this. So you can see the SFP has occurred on the lower time frames as well. And that gives you a clearer break of change of market structure down here. Then you come back in to that wick space without taking out the highs. Gives you that same entry within here. Same target of the lows. And you're seeing from this particular one, you're working at a 10 to 1, 11 to 1, just by getting an average entry onto this and by hitting that first target. Now, this being often the case, that is very often the case from this, is you'd be looking at this either being a major distribution or a major accumulation. So you could potentially continue to trade that down as long as market structure is in your favor. So from here, you have a downtrend that starts to play out that only gets broken all the way down at these lows. So at that point, when you start to see that break of market structure that comes back up and reverses again, you can get even more of a good reward out of this than the initial target. So that's the setup. Now I'm going to show it to you on another example here, and this is down at some major lows and actually on a very low time frame on this occasion. Okay, so this is a recent trade that we've had over the past few days. So price comes down, it forms a major low. All right, and we can see here, when you look at the chart, it's quite a significant low. The accumulation that you had down at those lows in order to get a nice double bottom off of this. You have this SFP that happens down here. So just taking out that low. And this is one that we actually traded on one of the trading rooms. Then what happens? Okay, you can target within that wick. And on this, you just tap the top of it. Okay, so you just hit into the top of it. And you can see here, this as your example of being the downtrend. Okay, lows, highs, lows. This one here gets broken. Okay, so there's your market structure change, your change of character. So then you are looking for an entry in here and a target up at those highs. Okay, so this gives you this particular setup with a long that if you are stacking those orders, you would have been partially filled on this. Okay, so target the within the wick. You want to be able to get it a little bit deeper into this, but it doesn't always happen. And that gives you a setup that looks something like this. Okay, targeting those highs. But again, as long as market structure remains in your favor, you can continue with that being a take profit, and you can continue to look to take that trade higher, as high as it really wants to go. Okay, so it's really, really nice, a really good example of catching those major pivots within the market where you can see a clear swing failure pattern, and that then gets defended aggressively to cause a big shift in momentum with the market. And it can be traded on all assets. Okay, so we can look at the GBP here. So this is the GBP to the euro, and again you see a nice range forming, so you can see very clear highs, very clear lows. So this again gives you an example of an SFP of major highs, okay, here, and even this one here. So depending on which level you want to be looking at, you've clearly come and taken all of these out and you've closed below, which then if you were to draw the block, gives you this. You can see clearly once again the rejection that has occurred after that swing failure pattern, clearly changing market structure, no matter really what time frame you're looking at it on. This is on a 2-day chart just because it's nice and clean. But you can imagine if you're on the lower time frames, that will clearly take out all of that uptrend that you've seen here. And then that gives you a really nice opportunity to get back in on that. So once again, this gives you an entry as a short around about that midpoint, ideally if you can get it. And you're targeting those lows as the take profit one. But once again, as you so often see, these form either major highs or major lows, and you often get continuation. And then you have a very similar situation that occurs down at these lows, where you do have an SFP then of the lows of the range, and you can get a very, very good risk to reward off of this particular trade itself here. So there's a few examples. Okay, take a look at the chart, start charting this, like I say, for Bitcoin in particular. Look at 4 hour. So look at the kind of the 4 hour chart is a really nice place to start, because that's where you get some of these nice clean examples. Okay, and so we see another one potentially here, but this one not really having that break of structure, although that, yeah, because this candle happens beforehand, but potentially within this. Okay, you may have an example here with an SFP of the lows, and then you could be targeting within this, and you can see there just tapping in to the wick that has occurred off of this, and a similar situation on this one, but on this occasion, this is what I mean by a close is important. So if you were to take this block after this SFP, you don't see a close within there, and so therefore you don't get fully invalidated off of that trade. So it's worth definitely something to look at. It's a really nice setup to be trading, and it does give you those very high reward setups with very little risk associated with that. So on that note, thank you very much. Give this a go. Any questions, as always, in the trading room, please do let me know. And thank you for watching. Cheers. Bye.